Hey everyone, Jonathan Lee, real estate sales representative based out of Toronto. It's September 2022 here, and the real estate market has seen some dramatic changes over the past year or so. Recently, with the market taking a downturn, with home prices dropping and sales transactions down, all mainly due to the rising interest rates and the Bank of Canada's positioning that rates will continue to rise to tame inflation. It's been really hard for buyers and sellers to understand what's actually happening in the markets out there, and that's certainly affected the confidence of whether it's a smart or safe time to buy or sell and what is to come. So today I'm providing a visualization for what's actually happening in the Greater Toronto Area real estate market. I hope you guys find it helpful. To do so, I'm going to use an analogy of fishing boats and fish, where the boats represent sellers. The bait in the line is a seller's asking price, the higher the bait corresponding to a higher list price, the lower the bait corresponding to a lower list price, and the fish here are going to represent buyers. And we're also going to include the mortgage interest rate here as an underwater current, which is a unique current because it only pushes downwards in this two-dimensional visualization, which obviously doesn't happen in real life, but humor me here. And the higher the interest rate, the stronger the current, and a stronger current is going to push down harder on these fish that are trying to catch the bait. As well, this water is pretty murky, so the fishing boats can't really see the fish in the water too well, but historically they didn't need to. They could kind of just show up and roughly drop the line in the water at approximately the right height, and the fish would bite, kind of like how normal fishermen operate. So in a normal market, there tended to be a lot of fish in the water. They're active and all looking for worms, and even though many of these fish would be caught on lines, new fish would show up every week and you could kind of rely on the steady stream of fish. Again, these fish would represent buyers. During this time, homes would get sold mainly one of two ways. The first is listing at their desired price, which can be visualized as a boat showing up and dropping the line at the level that they would want to sell their house at, and a fish or two would swim up and one would bite. Now the other way is with an offer date, which can sort of be described as boats showing up, dropping their line in, usually at a level that is lower than what the property would typically sell for, attract all these fish, some of whom are strong swimmers and some of whom aren't too strong swimmers, and on their offer date, the strongest swimming fish, being the buyer with the strongest offer, would catch the worm. Sometimes the strongest swimming fish would pay above market value, and in the past, market confidence was high and economies were expected to grow, so this was less of a wild thing to do, but this is also generally how the market's appreciated. Now, as interest rates have risen and the Bank of Canada has stated they will continue rising into the future to tame inflation, this has done three major things to the market. First, a lot of fish have gotten out of the market. They've decided that they're just not going to involve themselves in the market until things are stable. So you can kind of imagine this as fish hibernating in this cave right here. And remember how I said new fish would show up every week or so? Well, that's not really happening. The fish that are hanging around are still looking, but they're not being replenished at a high rate. Second, the underwater current has gotten stronger, meaning most fish have an inability to swim as high as they swam before, symbolizing buyers simply can't pay the same top-end budget of what they paid before because no one has millions of dollars in cash to buy a home. Buying real estate is almost all leveraged. Third, because the current has gotten stronger and the weather forecast is an even stronger current from what it is today, meaning the Bank of Canada is suggesting rates will rise even higher, what remaining fish are in the water are hesitant to swim higher even if they can. This also means that neither buyers nor sellers are aware of how low the bait needs to drop in order to catch a fish. And what I mean by this is true market value, being the price that a buyer and seller agree to in order to strike a deal, has a lot of play in it. So when you look across the real estate landscape today in fall of 2022, what this is actually looking like is all these boats dropping their lines to levels that worked 6 to 8 months ago when the current wasn't strong and the economic outlook was still bright. And they're hoping fish will come up to those same levels or close to it. But the reality is, of the few fish in the water, hardly any are even swimming up to sniff the bait. So this fall of 2022, if you're a serious buyer, you have tremendous leverage and negotiating power over these existing sellers. You're likely one of the few active buyers out there, and you will have the opportunity to buy with your own terms and conditions and may be able to negotiate very strongly against these idle fishing boats. If you're a serious seller, you need to think introspectively on what your true motivations for selling are and whether you need to sell. The risk of waiting out the market for another 6 months is a stronger current coming in and attempting to sell in an even more challenging market. However, both buyers and sellers need to know that the sky is not falling. All these fish here in this cave haven't disappeared completely. They're just in hibernation, and they're going to come out eventually, and when they do, they're all going to come out at the same time. This could be in 6 months, it could be in 2 years. It will almost definitely be when either interest rates drop or the economic outlook is much rosier than it is today, feeding confidence back into long-term affordability. But when these fish, i.e. the buyers, do come back out, the buyer leverage that exists today will instantly disappear and home prices will rise again. Thanks for watching. If you like this content and would like to see more of it, I'd appreciate a like and a subscribe. And if you want to get in touch, you can reach me by phone or text at 647-983-0770 or by email at JonLeeRealestate@gmail.com, or you can check me out online at JonLeeHomes.ca. I'll see you guys on the next one.